Well, good afternoon. This is Michael Douville coming to you from beautiful Phoenix, Arizona. I am so privileged to have Charles Nenner with me today, and we're going to talk about what's going on in the world. And believe me, there is plenty of things going on in the world. I was really fortunate enough to talk to Charles January of this year, prior to the coronavirus, prior to problems in the economy. And Charles gave me some absolutely amazing forecasts. All of them came true. Charles talked about that he saw unemployment going to depressionary levels. He saw that the economy was going to just drop. The GDP would go negative hugely beyond what the depression would do. He saw oil going down to $5 a barrel, and he saw interest rates falling. All of these long before anyone was even talking about the coronavirus. So kudos to you, Mr. Nenner. And I'm going to tell you, when Charles Nenner says something, you really need to pay attention because it's certainly to your advantage. So thank you so very much, Dr. Nenner, for being with us today. And I want to ask you a couple of questions. But first, is there something that maybe that you'd like to bring up that you're seeing in the marketplace?
Well, the situation like this, we expected the big bounce of the last 2 months, 3 months at a buy signal. And a couple of days ago, we went into zero stocks again because I think the bounce is almost over. And what I want to mention is that the excuse of people who don't know what's going on say, well, the market is always right because, we got this huge up move and they don't know, but the market looks forward, the market is right. But I sent out to my clients what happened after the bounce in 1929, the bounce in 73, 74, in 2000, in 2007, 8, and the market was totally wrong. So this idea like the market is always right is actually not proven at all. Another thing that I want to bring up, which most people don't know, because people are buying because it's very cheap, two things. First of all, in every crash, the S&P earnings came down. Now the S&P earnings are totally collapsing, but the market went up. It's the first time, I think, in 100 years that I've ever seen that. And the second thing that I want to bring to attention, which most people don't know, is that if you start opening an account with a broker or bank, the argument is stocks usually go up 7-8% longer term. That's based on the fact that if you draw a line through all the tops and bottoms going back to 1900 or 1870, the line goes up 7-8% a year. The problem we have here is that we're trading 45% above the line. So if you want to go back to the average, only back to the average, not even below the average, you have to go down 45-50%. I just want to bring that to attention because the slogan is, actually longer term markets go up 7-8%, but people have to look a little bit better because these are very dangerous times and really understand what the situation is.
Well, oftentimes people think linear as well. So they can extrapolate it just in one straight line. And of course, life is not linear. It runs in cycles. And it depends on, as you've taught me, where you are in that cycle. It could be high in the cycle, which could be 45% over your baseline. Correct. And I don't think this bounce that we've had in the S&P is all that unusual, is it not? I think it's the last two crashes in the .com and then the 08 crash, didn't it come up about 40 or 42% from the bottom on the first leg down?
Especially, it looks like what happened in 1929, 1930, and in 73, 74. The NASDAQ is a special case, but that's only because the FANG stocks, only those few stocks, now make up like 25% of the NASDAQ, and they go and go and go. But for the rest, it's not as spectacular as it is. In the meantime, nobody knows what they're doing. As you have probably in the States, you have it also here in Holland. 100,000 of people that never invested opening accounts to start going into the market because they think, you know what, I missed it on the 2008-9 bottom, and now this time I'm going to be there. So that's very worrisome.
Well, and I think people think that this is going to be the bounce, it's going to be a V recovery, but oftentimes these are more like a W recovery, are they not? where you get a leg down and then a leg up, and then the second leg down. Isn't that one oftentimes worse than the first one? And that's where the real drop is. Because you're right, there's no earnings in the S&P. There's
Right.
no one's making any money.
So I remember at the high when we went to zero stocks in February, just after we talked, I asked people if somebody can explain to me why they're in stocks. I like to know. I never got an answer. And now I ask people why going to stocks. I still don't get an answer. But they make fun of Buffett and they make fun of all the big guys, like, you know, we small investors outperforming everybody. It doesn't end well, usually.
Well, and I when I give my seminars, I tell people, you know, you don't have to be 100% invested 100% of the time. You can have some of your money in the marketplace and keep the rest pretty free. You know, Charles, most of my clients are baby boomers. There's some older clients that I have. They're really concerned. They're very conservative. First off, they're past their earning years, so they have to be very, very careful with the money that they have. And they're looking for some place that they can put it where they can get some kind of a yield and stay fairly safe. You made a tremendous call last year and then reinforced it in January, talking about small units for residential rentals where you can get an income and at least park your money. I'm going to tell you, kudos to you, because you called for the residential stuff, and real estate in the retail and in the commercial is just collapsing. They're just having major, major problems. But the call you made in the residential, that has just been very, very strong. Can you think of anything? I've been having a lot of people asking me about bonds because they want income. Any place
Well,
that
how can they don't give any rate of return? You don't want to give your money away for 1.5% for 10 years. It's not going to help you. Especially, I should mention that bonds are forming a major top, and soon interest rates will go a whole new cycle, and interest rates will start going up for many, many years. That means bonds will go down, so that's not the place. The only place is we have been bullish on gold since, I think, end of 2011, and the gold cycle is up for a couple of more years. And I know people find it speculative because they think they know why stocks go up, which I don't really know. So they think I have no idea about gold, so I don't buy gold. But that's actually a place to put in some money still.
Well, it's been a store of value for thousands of years, so it's still a store of value. What about income? Any place that they can go to get income at that maybe a baby boomer can? You know, a lot of my baby boomers, they're trying to transfer their wealth, so they'll own Amazon, they'll own Apple, they'll own some big Dow stocks, but they don't throw off much in the way of dividends. I mean, the 5-year Treasury auction this morning was oversold, and I think it went out at 0.33, less than 1/3%. I mean, you're absolutely correct.
No?
Why would you lend any money to anybody for that kind? That's like just parking your money in cash. That's just awful. If you think gold is going up, do you think commodities will be going up as well?
No. I think it's mostly gold and a little bit silver later. I still think we're going to have deflation. So you have to make the point, because most people think, well, if you have deflation, gold will not go up. And then I say most of the times, gold goes up in deflationary period, not in inflationary period. What people remember is, you know, when they were alive, 60s, 70s, 80s, 90s. But that's one period. But you really have to look at history to understand and predict what will happen.
So you think that we're still have a deflationary period, and are you thinking that we talked about bonds and interest rates going up just a little bit. Do you think that the sovereign debt, and of course here in the United States, we have $3.3 trillion of municipal debt. Do you think this is at risk?
I think it's at risk. That's why bonds yields will go up, because normally I think the economy is going to be much weaker still. And then interest rates will go lower, but because the whole thing is at risk and liquidity problem, and soon people are afraid to give out loans only if you give a high yield. That's why interest rates will go up also. It is a very difficult situation to make a living from finance and money that you have. So that's why we're working very hard for everybody, because we do these cycles, and we tell people when to go in stocks and out of stocks. You don't have to do it every half year, every couple of months in the gold or in the bonds. You have to be a little bit more active if you want to make some money, because there's nowhere to go.
So let me ask you, when you think interest rates are going to go up, that's very important in my business, in the real estate business. Do you have a time frame for that, Charles?
I think we saw that, so that already the low in interest rates, and from now on for the next 30 years, interest rates will go up. It's a whole new 30-year cycle. It doesn't mean it will shoot up immediately, but it's a situation in the end, like in the 80s, we could go above 10%.
No, I understand. So when we've had a very good cycle with the interest rates coming down, and of course now we're going to do that same cycle going back up. Can you put a figure on as to what you think 30-year rates might be 2-3 years out from now? 10-year maybe?
Well, I can only tell what I don't know what the cycle exactly. I'm not prepared, but I would say we'll go on 5, 6, 7% in 3 years.
Oh, no kidding. Well, that would be significant. Oh my goodness. So that would really, really be difficult for anybody holding bonds. What do you think is going to happen with the Federal Reserve when they're doing yield curve control? This is the new buzzword. Do you think they're going to do that?
It's beyond me, and I don't even know if it's going to help. Like I said, even I had the whole thing at Goldman Sachs discussions. I said, listen, I do my thing. I can tell you what will happen, and I tell you when it will happen. For the rest, I know as much as the other people. Don't ask me because it's not my expertise. How did I know the employment? Because the cycle in the employment was turning around. I had no clue what will happen. So it's the mystical thing of what's going on with these cycles, because now we know there was a virus, and that's why a lot of people got unemployed. Who would ever thought that?
Who would have thought?
So I don't deal with what. Yeah, I know. I wrote a computer program, and it works for many, many years. It tells exactly what's going to happen if it's inflation, deflation, unemployment, whatever you need, markets, gold, silver, and that's what I do. Now I leave it up to other people why it happens. I don't even know if it's true what they say, but let them keep themselves busy.
So let me just piggyback on that. What is your forecast for the GDP? We seem like we're hearing that we may have bottomed. And of course, the definition of the ending of the recession is that you're no longer going down. But coming up might be a completely different story. When do you think we're going to start feeling the fact that it's actually going to start getting better? Do you have an idea when that might be? Well,
first of all, I will remind you, because you're already a long time watching this, there used to be in the Wall Street Journal a column that says "Hurt on the Street." You remember that one?
Oh, yeah.
And then they found out that if people advise to buy certain stocks, it's because they want to sell it. Oh. So you have to see what the interest is of people who say GDP is going to do this, GDP is going to do that. We have no interest. I don't care if it goes up and down. I just tell the facts. I'm politically not dependent on somebody, so I don't have to sound nice. So what I hear in the United States, everybody has his interest, and they force him what to say. I see that the White House forces the people that are expert in virus situations. They can't say what they say. They have to come back and they have to change their mind. So you don't know what's true or not. Only the cycles and the work, you have to do it yourself. You can't trust them. So of course they will say, listen, GDP is going to pick up, because if they say it's going to go down, then the consumers will stop and it makes it worse. So through the history, they always have to say, well, it's not so bad. The market will come back. The consumer comes back. That's not the case. I think based on the research I do about this virus situation, there's a very clear cycle. And I think that in 1 or 2 months, it's going to be much worse than it is now. So then you can add up what's going to happen to the economy.
So you think that we're going to be heading down even further than where we are? So we haven't bottomed, is what you're thinking?
Yeah, I think it's going to be much worse.
So the economy is still heading down, and the GDP is not going to recover yet at all?
No, remember, I still have a downside target of 5,000 on the Dow, so something has to happen.
I know you do. Yes, I'm aware of that.
Now, it sounds crazy, but when crude was 68, I said it goes to $4.90.
You did.
And it went even negative, which I couldn't see because my system doesn't allow me to see negative crude prices. But that was pretty good. So you never know what can happen.
It was more than pretty good. It was absolutely amazing. It was just an incredible call. Even when I finished talking to you, and I go, oh my God, how's it going to get to $5? And
right.
Who would have thought? And yet there it was. So let me just recap that a little bit. So we think interest rates are going to be heading up in a foreseeable future, probably bottoming now, I would guess. Federal Reserve probably going to do absolutely everything they possibly can to keep the interest rates down as low as they possibly can. But you think that the forces are going to be driving that up within the next couple of years? You think we'll be up 5 or 6 or 7% on a 10-year?
Definitely, yeah.
Well, that's going to make it very, very difficult for sovereign bonds. So are you thinking we're going to see defaults across the globe in sovereign bonds, sovereign debt?
Well, I guess you probably know better than I. I only know it goes up and down and how high it goes and how low it goes. Really, I mean, there's a lot. I don't read much because, usually what happens is if everybody's bullish, I have to become bearish. So I don't want to be emotionally pressured by hearing the whole world thinks the opposite of me. So I don't want to know what they say. Otherwise, it's also for me difficult to stick with what I think.
Okay. So we expect the economy is still trending lower. So that would go with your forecast that we've got another leg down in the stock market. We have another leg down in the economy. You and I chatted in January, you thought housing would be recovering in the fourth quarter of this year. I don't know if you looked at your charts. Do you still see housing on your charts recovering yet this year?
I tell you honestly, I didn't look.
Okay. Would you still say that rentals are still a good place for?
That's still a good place. What else would you do with your money?
Well, isn't that the truth?
The stocks can go down, bonds will go down. Real estate can go down, but at least you have something and you have some income in the meantime. So I would say that, and the metals, that's the place to be. Or if you want to watch our research, investing becomes very simple. But if you don't, then that's the place to be. Small rentals.
And you see unemployment as well is going to be following all this down. So we see the GDP going down and probably unemployment still climbing on this, I would guess.
Yes. Well, climbing, it's already bad enough.
Yes, it is. It's terrible. It's just really awful. So where else do you think that investors, so you're thinking gold is probably still a place to put some of your money?
Longer term, that's a place to we do it, and then we play, $100, $150 up, $150 down, and we make a very nice rate of return. If you don't want to do it, you can just stay long for the next couple of years.
And what about one more time on oil? Now we're approaching around $50 a barrel. I see it's been down today. What's your long-term forecast for oil?
So our upside target was 42. We hit 41.75, I think yesterday before. I can tell you specifically, the cycle tops in a week, and then we go down again.
And do you think that's going to be going with the dollar? Is the dollar going to be forcing the oil down in price? Do you see the dollar rising at all? You and I had talked in January. No. I think we were talking about 112 possible.
Yeah, but that will still take a while. It's in a trading range. And looking at the cycle for the next couple of months, it will not rise.
So time frames, you think even further out, maybe 2022, the dollar is still going to be very strong?
Yeah, but not for the next couple of months.
So, that's really good. So we've got employment going down. We've got the GDP going down. We have interest rates coming up. This is going to be some very tumultuous times. And you think the virus is going to spike up again?
Yeah, and don't forget that my 60 years of social unrest that was in the 60s is now is going to be much worse. So this is only the beginning of internal struggle.
Wow. This is going to be interesting times that we live in, Charles.
That's what the Chinese say. May you live in interesting times. But we're getting a bit tired, no?
We are. Yeah, we're getting too old for this, Charles. So,
right.
Well, that's really wonderful. And Charles, you've got a newsletter that you offer. I think you still offer a free subscription for 30.
Yeah, for people who follow you, they can get the subscription for a couple of weeks for free. And if they like it, they can always sign up.
Well,
but I would just take the free subscription because the next couple of weeks is very critical. A lot is going to happen.
And they can get that at charlesnenner.com?
Correct.
Well, that'd be really, really wonderful. Anything else that you think we're going to have some turmoil in the world with financial? and now we're going to have turmoil in the world with social unrest. Is this going to? It's
Right.
probably going to become a lot because of the fact that we have unemployment in the world. People are out of work. It's all coming together, isn't it? All these cycles are coming together for some kind of an event, I would guess.
Yeah, but it also has to do with the fact that we have social media. If somebody mistreats you, you would tell a couple of people, but now you put it on Facebook and everybody knows about it. And the second thing is what worries me very much, especially in the United States, is to be politically correct. Nobody knows what's true or not true anymore. You can't say what you think. You cannot say anything that's so people are getting totally confused.
Well, that's right, and and it's like instantly. If you say something, it's instantly monitored all across the globe. So we have to be really, really careful. We try not to be political. We're just all trying to get along and do business among each other. So Charles, I want to thank you so very much for coming on today. This is wonderful. We'd love to do this again. Is there any other issues that you'd like to bring to fore today?
No. It's just people have to rethink their position in life and understand that. Do it the Dutch way. In the United States, you say, how do I make money? And I'm Dutch. It says, we don't like to lose money. The situation is don't lose money. Go and look what we do is, we will help you. And if not, you're going to be safe. Go in rentals of small apartments and just sit it out. You said it's going to take 1 or 2 years until things get better. But then you can sleep at night. You don't have to worry what happens to your income.
Well, that's really good advice. So let me just recap. So we see interest rates are probably about as low as they're going to go, and are going to start trending up from here. We see the GDP still declining and another leg down both in the stock market and in the economy. We see higher unemployment from here, or perhaps maybe not as recovering. So we still already have enormous unemployment from here. You see gold doing very, very well. And of course, that's a store of value used all across the world. You think bonds are at a risk and probably should be avoided, I guess, unless they're very, very short term. I suppose if you want to be liquid, you could probably stay in very, very short term Treasury bills, I guess, U.S. Treasury bills, yeah. I would think, Charles.
And I just want to make one more point because I like to put things straight. Don't think it's sure that they will find a vaccination against the virus. Because, for instance, against AIDS, they never found it. Everybody assumes, soon they're going to discover it. There are a lot of things that never discovered. So don't get carried away what people say. We're going to have a vaccine in a couple of months. It's going to be okay. What if they don't find it? You don't hear that. Because, again, the interest groups, every interest groups leaks out. We almost have it. So maybe you can get funding and then, you become famous and your stock goes up. You have to check these things for yourself. And now we're talking about life and death. That's why I bring it up again. Money, I won't say you can make it back because it's very hard to make it back. But this is very, very dangerous situation.
Well, yes, of course it is. And I think that brings it to, I don't know how we can do business when we're closing down shops and we're closing down restaurants and bars, and you can't go to a soccer game, you can't go to the theater. It's going to have the economy is going to struggle very, very, very badly from that. So it's going to fall right in line with your data then, Charles. I mean, your forecast again is incredibly accurate. So I want to thank you very, very much. And I'm going to say, everyone, if you get a chance, you really should take a look at Charles's research, and particularly in these tumultuous times. And you're welcome to call me or talk to me. And Charles, thank you so very, very much for coming on. It's always a pleasure to see you. Thank you so very much.
So again, if you played this bounce in the stock market, it's time to get out again.
Yes, good advice. And when Charles Menner sells you something, you should pay attention. Bye-bye, Charles.
Bye.
Bye-bye.